All right, so this one was a trade I took on the 3rd of August, being Monday, and that was actually the week of NFP. We had NFP on Friday, so of course I was aware of that, you know, and basically I was just hunting for low hanging fruit, meaning looking to get in and out like the nearest liquidity, you know. So before me is a trade I took. I took this trade on the 15-second time frame actually, you know. Obviously this was a failed trade. Yeah, but now I don't know if this is you might want to ask yourself, is this a, a failed trade like a normal trade based on luck, like probability, or failed trade in the terms of, decision making, like execution, uh, executional, failure, or just pure luck, you know. So we'll get to that. We'll find out. So, but first of all, let's go to the higher time frame so we can understand my thought processes. I mean, the reason I had to, the reason I was looking for longs and not sells, you know. So let's dive in. So first of all, I'd like to begin my analysis on the daily time frame. Daily time frame. I mean, I can use it weekly sometimes, but the daily usually gives me, I would say, just enough, narrate perspective. So from the daily, um, there's been a sell-off, into these imbalances. The first imbalances I was targeting was this imbalance, these two imbalances, you know. Then price, traded down to this imbalance. I had to use this other one too, you know. So once price got here, and then I saw this big up close candle, and I was just looking for buys up until this high, the closing the previous Monday high. So that was my target, my drawn liquidity basically. All right, so on the 4 hour, what can I see here? In the 4 hour, just the same story. I saw this mitigation block, price traded above, retested, and then continues. But there's an interesting thing. Our DOL, our drawn liquidity. Basically I was just watching at this imbalance here on the 4 hour, for price to trade into that. That was my actually like my that was where my eyes was drawn to, you know. So but on the 1 hour time frame, what can I see? On the 1 hour time frame, it's just the same thing, the same idea. Before price got to our target, our drawn liquidity, there was a rejection, rejection into what? So there was a rejection into 1 minute, into that mitigation block on the 4 hour, you know, and price got into that mitigation block on the 4 hour and then produced this rejection candle. Mind you, I don't trade based off of candle patterns or anything. This is just a signature, a sign. You know, and of course, where the sign is happening is very important. So in this case, the rejection is happening in our point of interest, being the M block on the 4 hour. So you have to pay attention to that. Now, if you take a look at the rejection itself, measure the range from the opening to the sorry, yeah, from the opening, no, from the close to the low. So meaning from here to here, if you measure the range, you see that there was no candle body closes, you know, below the 50%. if there was a 50%, if there was a body candle close below the 50%, then that might be worth looking and paying attention to. So, with this in mind, so that kept my narrative, my bullish narrative, intact. So on that Monday, when I turned up at the chart, I saw this breaker block on the 5 minute, you know, and so yeah, on the 5 minute, there's this breaker block. Price traded into it. That was where the SMR actually formed. So overall, the bullish narrative was, pretty obvious and clean. You know, so uh, so we had our SMR form here, and after NYC open. So the first target was actually here. Sorry, that was the obvious the obvious buy side after the small money reversal. So me entering here was actually second stage accumulation, not even the first stage accumulation, because this was a smart money reversal. This is the first stage accumulation. Uh, okay, smart money reversal. Low risk buy, first stage accumulation. So yeah, on the 5 minute, so there was this 5 hourly gap here, this imbalance. So that was where I actually entered, and I got taken out. So my entry was like before the close, that 5 minute candle closed. So my entry was, somewhere around here. That's before this candle closed, you know. So on the next 5 minute candle, that was when I got taken out, you know. So what does this mean? I think this is just obviously common sense. You can't just always be fixated on a particular time frame. You have to be flexible with how you go about with the time frames, you know. So I believe this wasn't just a random failure. I think this was a decision failure, you know, because if I was flexible enough, I would have checked the, um, higher time frame, like upper time frame from 1 minute, 15 minutes, 5 minutes, because obviously there's been a liquidity taken here. So I was supposed to check to see how the higher time frame, what's actually saying. So I guess I was just, maybe at the back of my mind, I was like, man, I've missed the move. Because looking at it, how many handles were this? This is about 300 handles, you know? So 300 handles, it's pretty much. So at the back of my mind, I was like, man, I've missed the move. So I was just, ready to enter a trade, and that's not always, it never always ends well. So I think being flexible, really flexible with the development of price, it's very essential. So yeah, I would have gotten in again. I would have, gotten in again maybe here, but NFP week. I didn't want to force anything. Just took that loss and then called it a day. Just one trade that day. But if I wanted, I would have just entered more trade here because this was a valid entry. Previous cycle high. My stop loss will go here and then I'll still target the same DOL, drawn liquidity. You know, this is about 6.5 hour. And this one was about what 5 hour. You know, so I think patience is actually very obvious. The missing piece here. Patience is a missing piece here. So first of all, I didn't want to force it by not entering more positions after that loss. But most importantly, I wasn't flexible enough to check higher time frame when this liquidity was taking. I was supposed to check, and see what the higher time frame is saying, you know. And this was actually the beginning of a new time cycle. Because if you look at this was a 1 hour close. See that? This is 1 hour close candle, 1 hour, full 1 hour close candle. So full 1 hour, the next 1 hour you should, pay attention to how we develop. Of course, we have to make lows, So when a new hourly candle opened, if we are bullish, it will look something like this. Open, we'll make a low, then we'll make something like this. Usually something like that. So, but not all the time, but usually it's like that. So if we are bullish, we'll make open, then low, then continue going higher. Bearish, open, high, then continue going lower, then close. So I believe that was what happened. We opened up from here. So this was the open, low, high, and close above there. So the bottom line here is being flexible. We can't stress that enough. So we have to be flexible, flexible, flexible. That's it. Um, and patience as well. Patience as well. Be objective with the price movement. So flexible, patience, and objectivity in terms of what has price done, what is he trying to do now, what is he trying to do next. So you have to know that actually, you don't just blindly follow price. You have to say, ask yourself, what has price done? So what is he likely to do now? Based on price delivery or rhythm. So yeah, so I think that will be it for this one, and I'll see you on the next one.